It's certainly my pleasure to have Ian Cubitt with us on the call today. And Ian specifically wanted me to go through this slide because it lays out the value that you can expect from the content today. So I just want to, as we start, I just want to read down through it. And it says, during this webcast, you will see the 5 words that will help you communicate the value you already provide. The 2 key questions that help clients express their desires. And actually, we even have a bonus question that we've added on today. So bonus coming all the way around, even at the start. And the number 1 step you can take to stand out from the next advisor, the difference between perceived value and actual value. So very much looking forward to this. Here's what you will receive. You will open the path to making more money than you've ever made. Maybe that's why so many people register for the call. They want to make more money. You will also open the path to customers seeing the value that you actually provide. And thirdly, you will open the path to more satisfaction in your work than you've ever imagined. So, Ian, that's a high bar that you've set with regards to value and what we're going to accomplish today. So I want to give you an opening word. And as a means of introduction, I'd like for you to just very quickly give us a little bit of your background, if you would.
Yeah, it's a real pleasure to be together with all of you today. And in terms of background, I grew up on a farm, and my dream was to be a dairy farmer. And so far, that has not that's not worked out for me. And actually, I'm really excited about where I am. So I started all kinds of little businesses on the farm back in the day, and I studied business at university and got my chartered accounting designation in the olden days. And for about 10 years, I was an income tax specialist with PricewaterhouseCoopers and BDO. And then the last almost 10 years, I've been focusing on a business transition coaching. Some of those years were a mixture of that and income tax specialist. So for sure, the last 5 years, I've been running my own practice as a sole practitioner, and I don't do any tax returns or financial statements or bookkeeping or any of the normal accountant stuff. I provide coaching for people through the relationship tension and the financial tension when businesses are in transition. Either the ownership is changing or the authority is changing, sometimes from parents to children, sometimes with multiple owners. And as soon as I started my business, 100% of my work is focused. Like, I do proposals up front. I communicate the value that I'm going to be providing to my customers, and most of my work is project based. And I issue proposals up front. And what I'm going to be talking about today is 100% from years of experience. It's more than just I read a couple chapters in a book once and now I'm talking about it. It's from real life action.
That's amazing to think about, that you have an accounting background. Obviously, you've done a lot in the way of taxes, but I don't know if I've met an accountant who doesn't do something in the way of taxation. So this is quite interesting. One of the things that you put on the slide, Ian, that you wanted me to put on the slide was, regardless of how you're being paid, you can present value. So we are going to do a bit of a poll today. I don't know if you want to comment on that before we get into the poll or not.
Well, I've talked to many advisors. I've talked to people outside of financial planning and advice as well. And sometimes people, like, let's say it's asset under management. I can't issue a proposal like some advisors who are paid assets under management. They can't say, hey, I'll do an estate plan for you and I'll charge you $5,000, or I'll review your will and I'll charge you $3,000, or whatever it is, because all of those pieces are part of the assets under management service package, and that's okay. Even if that's the way an advisor on the call today gets paid, the principles we're going to be talking about today are 100% relevant in terms of how any advisor, any person can communicate the value that their customer is receiving. So today is going to be focused on how to communicate the value that the customer is receiving or will receive. and that can be totally independent from how an advisor gets paid. We're talking about a couple of kind of fundamental principles about communicating value, and this might seem really obvious, but I think it's worth saying. The only way to communicate value in a genuine way is if I'm actually providing value. So the foundation of this whole conversation is when I'm communicating the value I'm providing to a customer or I'm going to provide to a customer, it's focused 100% on being genuine, serving, delivering value. It's not about trying to take advantage or earn more money by doing less work or anything like that. It's 100% good-willed in terms of as a foundation. And then the first principle that I like to talk about in terms of communicating value is that it's very important to have a process of understanding my client's needs or my potential client's needs and their desires. And understanding their needs and desires will help me to be able to deliver more value. And if I am serving in a way where my work, where my the value I deliver has an influence on my compensation, then delivering more value can usually result in increasing my income. But the purpose of it isn't to increase my income. That's like an overflow benefit from delivering more value. Another purpose of having a process to understand my customers' needs and desires is that them telling me what their needs and desires are is the basis for me to issue a proposal for them. So even if I were assets under management, I don't manage any money, but even if I were assets under management, I could communicate to my potential customer or my existing customer how the value that I'm going to deliver to them and how I'm going to help them meet their needs and desires. And understanding their needs and desires unlocks the value that I can provide to them. Because there's a lot of things that every one of us can provide to a customer, and understanding what their needs and desires are at this stage in their life helps me to zone in on what I can do to help deliver that. Mm-hmm. And my conviction is it's the only way for me to truly meet customers' needs and desires is if I understand what their perspective is on that. And normally the needs are pretty obvious. I mean, Lauren, I haven't even asked you this, but I know that you need to file a tax return every year. I just know that. I need to have my investments invested in something. Even if it's a GIC, it needs to be in something. That's a need, but the desire part is a lot harder to uncover, and that's where understanding their desires is especially important in terms of unlocking value that I can deliver to them.
Right.
So I'd say that's principle number one. A process of understanding their needs and desires will help me to actually deliver more value.
Mm-hmm. Yeah, and I guess the key, and you make a strong point, because we can easily get focused. It's so easy in this industry to be focused on the money and, wanting to deliver value in order to do that. So I'm glad you made that clarification that that's not really the motivation behind it. I guess it's a result of it, but not our motivation. So
yeah, I think, I can't remember where I heard this, but the purpose of me being business is not to, the purpose of a business is not to earn money. It's not to earn a profit. It's to provide a service or a product that's so valuable that a customer is willing to pay me a profit in order to receive it. Mm-hmm. Mm-hmm. So the purpose of the business is not about the money. It's about providing a service or a product that's so valuable, people are willing to pay me a profit in order to receive it.
Right.
So it's kind of like I speak the language of money. That's one of my native languages. Mm-hmm. And it's not about the money.
Right. Right.
Principle number two is if I can create higher value, that can result in a higher price. So I like kind of picking on the assets under management model, because people think, well, assets under management is kind of like a fixed income type income. In reality, a lot of investors have multiple advisors. So if one advisor is delivering amazing value, that doesn't necessarily mean highest return on investment, but if they're delivering amazing value, generally that has a spillover impact of bringing in more assets under management. So the principle number 2 kind of talks about how every hour does not result in an equal amount of value to a customer. And so every customer doesn't necessarily get the same amount of value from me as an advisor. And the higher value I can provide, the higher the value that I can communicate to the customer. And satisfying a want is usually a higher value than satisfying a need. And I'm like every one of you on the call today, and that is, I often feel I can charge for a tangible thing, like let's say putting together a financial plan, but I may be more hesitant to charge for something helping to navigate a disagreement between a couple about how they relate to money as a couple. So oftentimes we're really good and comfortable at charging for tangible things, and we're either hesitant to charge for intangible things, or even maybe worse, we don't even think about the intangible value that we're already providing. So I think about things about relationship vitality. Our hearts and our money are linked. That's not right or wrong. It's just true, and we see that throughout Scripture, that our hearts and our money are linked. And so if I can help a customer, if any one of us can help a customer have better relationship vitality, that's something of value. If you're available and you say, look, I'm going to respond to a phone call, email, text message within one business day or 2 business days with personal connection with me, it's not just with my assistant, that might be something that some clients really value. Or what about peace of mind, or having the endurance to encourage to continue on through this tough patch, whatever that is in life, or energy. Think about your own life, and when there's something that's really confusing, how stressful is that, and what is the value of clarity in those moments? And I know for me, a lot of my customers have nobody else they can talk to about their money situation. It's just not a conversation that comes up in friendly chatting.
I just want to zero in on something, Ian, there that kind of piqued my attention, is the tangible versus the intangible, because it strikes me that we are very good at charging for something that's tangible, something that's easily seen. But the intangible, which is probably where more of our focus maybe ought to be, we're very hesitant to charge for something like that. So it's kind of like a hidden value. So maybe kind of that's what you're getting at when you're talking about tangible versus intangible, correct?
Yeah. And whether I can charge for, like, whether any of us on the call can charge for the intangible value, maybe we can, maybe we can't, based on the compensation model that we're in. But we can absolutely communicate to the customer either the value that we have delivered, or we can communicate the value that they will receive. So I think of one customer that I had, and I said, I'm going to be right there with you, making sure that you don't get ground down by the buyer of your business and kind of crushing you, trying to put the pressure on to take a lower price. So I'm not promising that you'll get full price, but I am promising that I'm going to be there supporting you and helping you to have endurance and the energy to withstand this onslaught that the buyer is going to try to throw at you. And guess what? The buyer threw it at them. All kinds of reasons why they should take a lower price in the due diligence process. And that was one of there was a huge financial benefit that I helped them with, resisting that pressure from the buyer. But maybe even a bigger value was that they ended the whole journey and they were feeling great, and they were not exhausted, and they looked around other people dealing with similar situations, and it was a train wreck for some of their friends in different businesses without an advisor like that. And they just totally got zapped of their energy. So
I cut you off earlier. I don't know if you were completely done your thought or not, Ian.
Well, the last point was comparability leads to commoditization. And if I chase you down the road of commoditization, are you going to take off an extra basis point? Okay, I'm going to take off an extra basis point. Are you going to do this for free? I'll do this for free. Like, if I'm trying to be the same as the next person, then we're just chasing each other to the bottom, and we're not going to be earning enough income to even provide the high level of value that really people do desire. Most people desire. So,
and that's kind of where we are in this industry now, isn't it? I mean, it's pricing. Even commercials, the robo advisor, all of that. It's all about the pricing, as opposed to the value that the advisor can provide.
yeah. So, I mean, principle number 3 is a written proposal. Can I go to principle number 3, Lauren? We get
Yes.
to
Yep.
So, principle number 3 is written proposals increase the customer's understanding of value, and if you are being compensated in a way where that impacts your price, you can charge more if you use written proposals. And the reason for that is the written proposal will tell how I will serve my potential customer, the services that I'll provide, and also the value that the potential customer will receive. And if there's a price associated with it, then it'll say the price up front. And the written proposal is so important because it forces me to be clear about the value the customer will receive. And there's a difference. I'll make 2 statements, and they're very different. One focus can be about the value I'm going to provide to the customer. The next focus can be on the value the customer is going to receive from my services. So I can provide value to the customer without them receiving it, and they have no idea that I provided it. And we'll get into that a little bit more in one of the slides. And written proposal also helps me to be clear about the scope, so that I don't waste tons of time getting sucked into a service that I never even committed to doing. They just assumed that they thought I was doing it, and it's just, that can be complicated. And it lets me clearly articulate the wants and the needs of the customer, and even that provides clarity to them. When I understand their needs and desires and I communicate it back to them, they feel like I understand them, and there's a almost instantaneous trust and expectation that I have what it takes to serve their needs and desires if I can communicate to them what their needs and desires are. And the clearer the customer is on the value they will receive, the easier it is for them to hire me or to accept the price or to actually engage in doing the work. I mean, all of us have had experiences where we've recommended something to the customer or the client, and they've basically said no, and we knew, even if we weren't going to earn a dime off it, we knew that it was in the customer's best interest to take that action, and they didn't take the action. And clearly communicating the value the customer will receive will reduce the potential for that.
Mm-hmm. Yeah, and I think the 5 words that you're about to share it really will take us to a place where it's easier to understand the value and to communicate that value. And I think that's a big deal. Yeah. So somebody just asked, are there supposed to be slides? Well, the slides are coming. So Ian, here we go. Here's the 5 words. So you want to take it from here?
Yeah. So the 5 words is, what difference does it make? And so I made up a few examples here. So, one example says, I could say, I'll prepare a financial plan for you. And it's easy to assume that the customer knows that that's going to be valuable for them. But you can take it the next step further. You can ask, what difference does that make? And the difference it makes is you'll have confidence to earn and invest, knowing that you're on track to provide for your future needs. You will have practical tools you can use to have functional, meaningful conversations as a couple about your life and what you're living into.
So I would say, in response to that, what's in the gray area there is typically how we communicate, and what's in the black and white, we'll say, is really the value that the customer or the client should be hearing or needs to hear. That clear?
Yeah. Yeah, for sure. And you can even do this on so many levels. You can say you'll have confidence to earn and invest. Well, what difference does that make? People will be able to just pursue life and have less baggage in their relationships or at work or whatever. Like you can even take what's written in the black and white, and you can say, well, what difference does that make? And then you can get even more detailed in terms of the value that that you're providing through the financial plan.
So you've come up actually, Ian, with about 5 different questions. So not only 5 words, but so let's kind of walk through them, and or you can walk us through them.
Yeah, so the next one is I'll update your estate plan for you. Lots of people update people's estate plan, and it's often assumed that's going to be valuable for the customer. But we can say, what difference does it make? You'll have peace of mind knowing that the people you love will be cared for in a way that you would be proud of. So that is an emotion. Like, I'll update your estate plan for you. That's, to me anyway, that's not a real emotionally engaging statement. But to say you'll have peace of mind knowing that your loved ones will be cared for in a way that you would be proud of, now that's emotionally engaging. Because even if I don't want an estate plan, I do want to take care of my loved ones in a way that I would feel proud of. I might not even know what an estate plan is. I might never know what an estate plan is as a customer, but I do know that I want to take care of my loved ones in a way that I feel proud of.
Right.
So let's go to the next one, Lauren. So I'll review your will for you. So that's good. I mean, that's always good to do. What difference does it make? You'll be able to visualize with confidence that if you had died last night, you will know who will get your money and how much.
And, like I find it interesting because we will very quickly as financial professionals say, this is something we will do. I'll review your will for you. And it's kind of left at that. But that's, I guess what you're saying and you're communicating to us is that's not the true value, right?
That's the action you're going to take. That's the service you're going to provide. It's not the value that the customer is going to receive.
And I think it's challenging for us to actually rethink that and to think in terms of, okay, what value am I providing through this action? I think that's kind of the name of the game.
So, Lauren, you just got stuck in the common misconception. You focused on the value that you're providing. That's what you just said. And what I'm inviting us to do is focus on the value the customer is receiving.
Awesome.
Because I can say, well, the value I'm providing is I'm reviewing your will. And I can assume what that means for the customer. But if I change the language in the conversation in my own mind to say, what's the value the customer is going to receive? That's totally different. We're going to get into that a bit more when we get to one of the other slides about perceived value. So I'll just leave it at that for now. Okay.
Yeah, no, that's good. Appreciate that. Here's the next one.
Okay, I'll do a risk assessment and understand your investment profile. So that's nice. As a customer, I don't even know what that means. What that like investment profile, like that could be a foreign language to me. But if I say to the customer, you'll be able to sleep at night regardless of what is happening in the markets, now we're talking about something that's emotionally engaging, that I actually have a desire. Even if I don't want to know what my investment profile is, I do know that things go up and down, and I want to be able to sleep at night with confidence. So it might be a bit of an exaggeration. You'll be able to sleep at night regardless of what's happening in the markets. But it communicates that message of the value the customer is going to receive.
I think the industry has kind of, in some respects, lulled us to sleep in regards to terminologies like this: risk assessment, investment profile, and those are the types of things that we communicate to clients because we hear it all the time in this industry. It just kind of comes natural. But the result, like what you're saying, is sleeping at night is more important than all these things. Here's the next one.
We'll calculate how much tax you owe when you die. Most people do not get really jazzed about calculating how much tax they're going to owe when they die. And if somebody says, well, you need life insurance to cover the tax you're going to owe when you die, that normally doesn't even feel very, very engaging. But we could say, what difference does that make? You'll clearly see the steps you can take to reduce taxes and increase the resources going to people and charities who are close to your heart. That, for most people, would be more engaging than just knowing how much tax I'm going to have to pay when I die.
Yeah, one comment just come in. I don't know, Ian, I don't know if you're following the comments or not, but one comment just came in. Your 5 words can also be known as the "what's in it for me" kind of deal. WIIFM.
Yeah, I won't disagree with that, but I'm not going to embrace that right off, because who's the me in that? That can be confusing. So, like, what's in it for me? Is that me or is it the customer? And so, I think whoever made that comment is capturing the essence of what I'm trying to communicate.
Yeah,
it's just taking it to the next level. Yeah, what's in it for me? What's in it for the customer? I think that's what they're saying. Yeah.
Mm-hmm, mm-hmm. So let's get into the 2 questions then from here.
Yeah, awesome. So the first question is, tell me a memory about money before age 12. When I ask this question with my customers and potential customers, these early years experiences with money have an astonishingly huge impact on instinctive financial behavior. When I say instinctive, I mean behavior that people behave, the way people behave with money that they often don't even think about. That could be compulsive saving, that could be compulsive earning or status, or protecting what I earn and not having any financial vulnerability with my spouse or partner. Those are types of things that those experiences from before age 12 happen. And a lot of my customers say, I don't really have any memory about money before age 12 because there was none. And so even that is relevant to know, because now we're talking about dealing with millions and millions of dollars, and they grew up with no memory of money because there was none. Now they're looking at what to do with that wealth, transferring it to children or charities or whatever. And it's like they've never done this before. And understanding where they've come from is a huge piece that opens up the door for me to understand what their desires are, even to help them understand what their desires are. Because many times customers have never had a conversation like this with anybody, even with their spouse or their partner.
Yeah, and here's your second one.
Yeah, tell me about your children and how they're different. Now, clearly, if you're dealing with somebody who's not married, or they are married but they don't have children, then you can modify this question to their unique situation. But this question tends to reveal some underlying dynamics between the spouses or partners, especially if it's a blended family. I've found this question to be astonishingly helpful in opening up the conversation to reveal some factors that the parents may be dealing with in terms of how they figure out their money situation, whether it's selling a property to one of the children, giving a cash inheritance to other children, some inheritance to some early, some when they pass away, all those sorts of things. And there's always underlying dynamics, and this question is really helpful at uncovering that and helping them to express their desires.
Speaking of expressing desires, somebody's just marking up our screen for whatever reason. I don't know who has the capability to do that. I don't know how to erase it because this software was just updated. So, yeah.
What if we go to the next slide, Lauren, and see if it clears the system?
Let's do that. Here's the bonus question.
Bonus question: what does success look like if we were to work together? So this question lets me be able to say back to them what they view success to be, and I can show them how I can open the pathway for them to achieve their vision of success.
So
if I don't know,
how does that question really impact and cause you to go deeper? Can you share some examples, even when you've asked that question, what responses you've gotten? Obviously, without getting into a lot of the weeds, but yeah.
If I don't understand what their vision of success looks like, then I, as an advisor, am going to be leading them towards some type of vision of success. And chances are it's going to be either my vision of success that I'm imposing on them, or what I'm assuming to be their vision of success that I'm leading them into. And both of those are misguided because I'm not them, and my assumption about them isn't them. So I need to clearly ask them what their vision of success looks like. And most of my potential customers do not know what their vision of success looks like. And there's, Ron Blue talks about simultaneous and competing priorities in life. If there's a marriage or a life partnership between a couple of customers, like with our clients, they have simultaneous and competing priorities in terms of what their vision of success is in whatever they're addressing. And so asking that question helps each of them to be able to express their hearts. And then we can address it. So one specific situation I can think of, a potential customer said, well, I want my child to run the business properly. I thought, okay, like based on your based on your infinite wisdom of what running the business properly even means. And so we had a meaningful conversation about that, and whether he was going to control, even though he was going to sell the business, or whether he was open to his children making their own mistakes and growing into their own vision of their future of the business once they became owners. So it really opens the path to a functional conversation about their desires and how I can serve them.
Yeah. Did you want to comment at this point on perceived versus actual? Is this a good point to? One question that did come in, by the way, was: are you following the book Money Model? Is this the Frank Lombardi model? Are you familiar with that?
I've never heard of that. I'm not following that. I mean, most of this is from what I've learned through Ron Baker's book, Implementing Value Pricing.
Okay.
So that's the foundation for a lot of, if you look online, it's the copy I have is the purple one, Implementing Value Pricing by Ron Baker.
Okay.
You don't have to use a value pricing approach to communicate value to customers. That's why I'm being a bit generic here. I'm not talking about value pricing. I'm talking about communicating value to the customer, regardless of how you get paid.
Mm-hmm. Yeah,
So go ahead, Lauren.
Oh no, you go ahead, Ian.
So there's a difference between perceived value and actual value that a customer receives. So if a customer doesn't perceive the value that I'm providing, it's likely that value takes place without them actually receiving the value. Now, I know there's exceptions. So let's say I'm a lawyer and I update somebody's will and they don't think it's beneficial to them, but it actually is. Okay, they've actually received the value, but they haven't perceived the value. But normally when we're giving advice to customers and clients, they need to take some type of action surrounding that advice, whether it's implementing a financial plan or savings or earning more money or RESP or whatever it is, buying a life insurance policy. If they don't perceive that our advice is valuable for them, then they're not likely to take the actions that will enable them to receive the value. Yeah. So by communicating the value to them, by communicating the value that they are going to receive, they're more likely to understand that value, which is like perceiving the value, and then they're more likely to receive the value.
Mm-hmm. Ian, you shared an example with me as we chatted a little bit about somebody who came in and they were prepared. They had a budget. I think it was, you had mentioned $1,000. And can you elaborate a little bit on the discussion, how it went, and your communication of value and what the result was? Because I think it's a prime example of really what you're speaking about. Because I think clients tend to come to us, probably have a perceived value in mind even when they come.
Yeah, so I actually called that customer. I haven't worked with them for years now, but I called him after we spoke, and I asked him. I said, "I'm doing this webinar on communicating value. Would you be willing to tell me your perspective?" And so I'll back up. And I met this is my first customer when I started my business, and I asked them, one of my standard questions is, based on the value you're looking to receive, what kind of budget are you looking at? So it's not just saying, what's your budget?
Mm-hmm.
It's saying, based on the value you're looking to receive, what's your budget? And he said $1,000. And then as the conversation went on, he said, well, maybe $2,000. And so I put together 3 packages. One was, I think, in the $5,000 range. One was $9,000. One was like $13,000 or $14,000 in the packages. And they said, we really like the middle one, but could you take something from the top one and include it as well? So it was over $9,000. That was the price that they ended up agreeing to. And I called them this week and I said, can you tell me, like, did you feel like I was taking advantage of you, or were you ever bitter at, what I charged you for that? And he said, after you took me through the process, I saw the value. I realized $1,000 doesn't go very far. So that's where communicating the value lets us as advisors just express the generosity that's in us to serve and, overflow value into people's lives. And they can agree to engage us at a price point that they would never have agreed to, because we've educated them about the value that they are going to receive.
Mm-hmm.
Yeah.
Yeah, I think that's pretty powerful. I want to remind everybody, if you do have questions, put them in the chat box or in the question box. That's either one works. Easier in the chat box, but somebody is asking for you to show that title again, if you would, Ian.
Sure.
The book. So, Implementing Value Pricing by Ronald Baker.
Like the principles from this book, I've helped people who nurture other people spiritually benefit from the principles. House cleaners, real estate appraisers, accountants, counselors, all kinds of different people have been able to benefit from what I've learned from this book. It's not just for financial advisors.
Right. And
he's a financial advisor. Like he's a professional financial advisor person. So anything from that book is kind of focused. It's focused on our niche, but it's applicable to all kinds of industries and even non-marketplace type environments as well.
Yeah, there's a question from Heather that's in the chat, Ian, about children. So I'm wondering if this is a good spot to put in this question, because it may be appropriate when it comes to values. How do your children know now what the future is that they would prefer to see if we as adults are not yet there? Do we sit down with them also? Not sure I fully understand that question.
Well, sometimes I like using extremes as I'm coaching people, so I'll use an extreme here. Do I think that it's good to wait to talk with the children in the situation until mom and dad have everything figured out about their future?
Mm-hmm.
Clearly, no.
Yeah.
I mean, the parents will never have everything totally figured out. So, my work is focused on coaching people through their business transitions, and that usually involves talking with adult children. It almost always involves talking with adult children. Often it involves talking with adult children who have no involvement in the business. Mm-hmm. Because it's very common for the children who are not in the business to assume that the child in the business is going to get some kind of family discount, or, mom and dad are just giving the farm to them. Those types of assumptions are very common and can be very toxic. So I regularly include more children than might seem obvious in the journey.
So that takes me in my thinking back to the intangible piece about, one of the things that you're bringing to the table is in relationships, dealing with business owners, passing the business down to their children, for example. Obviously, you're having to engage with, at least one generation, if not 2 generations. So obviously, there's a lot of intangibles around control issues. When a a senior person is giving up control of the business to someone younger. I don't know if we want to get into the value examples that we have talked about earlier, but is there anything that you'd share on that level?
I think if we dig into that, Lauren, I'll be able to express it as we go through. I think that'd be perfect.
All right. Yeah. Here we go.
So here's a value for you. I kind of grabbed some examples from a bunch of different proposals that I have for customers. So in every proposal, I actually use the word value for you because I'm focusing on the value they are going to receive. And so, here, the value of this proposal is the value of the work that we're going to do together is will reduce the chance of a financially induced train wreck in the family. I've had many potential customers really respond to that. Like most of my customers have an abundant amount of resources and they don't want a financially induced train wreck. You'll have purposeful direction for each person and confidence to proceed into the future. You'll have more mutual respect and acceptance for each other. You'll have less management by personality, and you'll be able to have professional conversations about aspects of the business where you tend to have disagreements. So none of those talk about you'll earn more money, you'll have better return on investment, we'll save you taxes. It's very possible that those help you to earn more money and have a better return on investment and maybe save on taxes. But that's an overflow benefit. It's not the core piece of value that the customer is going to receive from this package. I mean, there's other packages. I say, I think you're going to save, $1,340,000, and that's a huge, piece of value that the customer is going to receive. So I'm a chartered accountant. I love saving people taxes, and that's part of the planning I do. There's other things that often are more valuable to the customer, even if I am helping them to save $1.3 million in tax.
Could you break down a little bit more what you mean by a financially induced train wreck?
Yeah. Let's say, Ron Blue talks about the concept of love each child equally, treat each child uniquely, and that it's not about being equal, and that actually being equal, like trying to give every child exactly the same amount of money, could actually be unloving. And so if a customer gives an inordinate amount of wealth to one child and a lot less to the other child, and there's no communication about the purpose of that or the heart or anything, it can be very easy for those two children to never talk to each other after mom and dad pass away, or they do, and it's always cold. So it's so easy for the way we handle our money, the way our customers handle their money, especially in the inheritance, estate type things, for the way they do that to create huge barriers, huge relationship barriers that last sometimes for a lifetime, sometimes for generations.
Well, the third point you have there, more mutual respect and acceptance. I think in many respects that's something that's intangible, but also very, I don't know, you could probably use the term priceless to work that into relationships. And, this industry tends to focus on the tangible things. And I think many times what you're saying is the value is often in the intangible, but it's also in how you communicate that value. I think that's kind of what I'm taking from this. How do you communicate that, mutual respect and acceptance? How vital is that in your relationships?
So one thing you just said was, Lauren, the value is in, and then you filled in the blank, in the acceptance or respect or relationship or whatever. Right. So this is just another example where there's an opportunity to say the value the customer will receive is possibly even greater in the intangibles than in the tangibles. Because most of my customers do not have a shortage of financial resources. I mean, we all have less financial resources than we can figure out what to do with. Like we could all use a bit more, but most customers have a more pressing need to feel respected and accepted than they do to have an extra $1,000. I mean, even from a spiritual perspective, you know, for many years, decades, I felt like God loved me, but he didn't accept me. And so there can be that dynamic in families where, you know, I know dad loves me, but it seems pretty clear to me he doesn't accept me because I'm not like my brother.
Right.
Or, you know, that one time I really pissed him off. So the value of feeling respected and accepted for a customer to experience that is, like you say, priceless. Obviously, you have to put a price on it as an advisor, but it is in the priceless spectrum of, and that's where I say there's a difference between cost and price. There's a price to work with me, to have me coach you through the journey, but it's not going to cost you anything because the return on investment is going to be far higher than the price. And that, I think that nuance of language is so important for any of us as advisors, that when a customer hires us, it is not going to cost them anything to work with us. There is a price, and the return on investment will be far more than the price. The real cost is not getting the guidance and the coaching and the support in, you know, in whatever we can provide to them.
Right. So Gord asked a question: is family succession planning a key focus of your deliverable?
If that's what they desire, it is.
Okay.
You know, if their desire, if it turns out, like if I facilitate the family meeting and they have a common interest to sell the business and do something else, that's what I help them pursue. If their common interest is for one or more of the children or children-in-law or grandchildren-in-law, you know, if that's the common interest for one or more of them to take over the business, then that's what I pursue. So I don't idolize one specific outcome as being better or worse than another.
Okay. John also asked a question: can you speak to your experience with asking, I assume it's question 1 and question 2, are there drawbacks in terms of time spent, depth of relationship, and level of buy-in by the client and their family?
Is there a drawback to asking those questions?
Yeah, drawbacks in terms of time spent on those questions, I guess, depth of relationship, and level of buy-in by the client. So I guess getting a buy-in with asking those questions. I think that's what's being asked here.
So when I ask those questions, it takes a astonishingly short amount of time for them to answer them.
Yeah.
It has always deepened my relationship with them. It has instantly differentiated me from pretty much any other advisor they've ever talked to. So whatever time it takes is worth the time. It's like, is it going to cost me anything as an advisor to take that time? No, that's a price I'm willing to pay. The time that it takes for me to ask those questions is a price I'm willing to pay for the return on investment that's going to yield. That connection with them, that trust, that knowledge of their background and their tendencies, that's absolutely, it's gold. I don't know if I'm answering the question. I think I am, Lauren.
Well, the response is that's exactly what I was looking for.
Okay.
So I think you nailed it.
Okay.
That's good. We got example number 2 here, Ian, as well. We have about 9 to 10 minutes left. So if you have a question, feel free to put it in the chat box or the question box. Either one works. But this is example number 2, Ian, so you can walk us through this a little bit.
Yeah, and if we have questions, I'm happy to answer the questions instead of the slides, but I think we have time for everything. So value for you, example number 2, you'll reduce the chance of children quitting when frustrations and resentments flare up during peak season. You'll reduce the chance of the business boomeranging back to mom and dad. I mean, this gets back to the concept, somebody asked the question about family succession. I mean, this isn't like, sometimes most of the time, once the family succession starts, mom and dad don't want the business back. I mean, they've been ready to move on for 5 or 10 years. So they don't want the children quitting after they've started the journey. And you'll be less focused on each other's weaknesses which will free you up to release each other to make choices and mistakes. Oftentimes parents with a good heart try to protect their children from making mistakes. And that can actually be one of the most painful things for the children, because the children want to be able to some extent, just let me make my own mistakes and learn from my life journey and the learning that I've learned from your mistakes. So I can't prevent my children from making any mistakes. And the more I try to do that, the more dysfunctional our relationship is. So that value point speaks to that. And then I'll have fewer conclusions that start with he always or she always, which will result, if I have fewer conclusions that start with he always or she always, it will result in less stress, more freedom, and a feeling of being actively at rest. And most people, they're like, okay, actively at rest? Like, how's that even possible? And it is possible. And that's one thing that most customers do not regularly experience. I'm confident that every one of you on the call today finds some aspects of your work easy to do. And the truth is that what comes easy for you likely is hard for your customers. And so when you're looking at the value that your customer is receiving from you, it's very possible that something that takes you 5 minutes is incredibly valuable to your customer. So even if you can't charge them $5,000 for it, it could be priceless for them. So another thought is, if I'm still thinking in terms of hours, it could be easy for me to think that I just delivered $100 of value. Okay, I just spent 20 minutes or a half hour, an hour. It doesn't matter what your hourly rate is. I can easily think it took me an hour. It's only worth $100 to them, or it's only worth $500 to them because that's what my charge out rate is. When in fact, the value that any of us deliver to our customers can be vastly disconnected from our hourly rate if we're doing an hourly rate compensation. And if I'm thinking about time, I often miss value points. I often miss areas that I could provide value to the customer, and I often undervalue the intangibles. I've had a customer say, I never like talking to my lawyer because every time he starts asking me about my plans for the summer or vacation or retirement, I just think he's trying to squeeze more money out of me, and he doesn't actually care. So if that's the type of arrangement you have, like the hourly billing, that can be a real barrier to connection with heart level conversations with your customer.
Ian, I've also heard you talk about the value of a financial plan and how many advisors who are paid with assets under management, which was how I was paid in the industry, basically giving away the plan. It's like you're giving away the most valuable aspect of really what you do. And I've been to so many different financial conferences, as I know you have, and most of the time the focus is on the money, the focus is on the calculations, the dollars, and here's the net out and all of that sort of thing. Your focus tends to be completely different, if I might say so.
It's completely different, and it accomplishes those same things, Lauren. So we still got to take care of the tangible stuff. Absolutely, 100%. And even if your assets under management, and even if you're giving away the financial plan, so to speak, you can absolutely communicate the value to the customer that you just gave them. And you can, if I pat myself on the back too much, I stop communicating value to the customer and I start looking like I'm full of myself. So I'm not saying go overboard. I'm just saying you can communicate to your customer, this is the value that I provided to you in this financial plan. This is the value you're going to receive, and all of that's included in what you pay me. Mm-hmm. And I am so excited to be able to provide this to you. And this is going to take some work for you to implement, and I'm here to support you in that. And that's the value that you're going to get amazing value from this.
Right.
So you communicate that regardless. And we're running short on time, Lauren. I mean, I got lots of time, but we committed to the hour. So one thing I just wanted to say is, we got the conference coming up in February, and every time I've been to a KA conference, I've never been to the one in Florida, so I'm excited to be virtually participating this year. But I just encourage everybody on the call to sign up for that. And it looks like with the slides, I'm jumping ahead of you, Lauren, there. So I apologize.
No, that's perfectly fine. But let me say that, Ian, you challenged me today because I did say that I was going to do this at the end. And you asked me a question, challenged me around the value, because let's be honest, you can get 18 hours of CE wherever you choose. But what's significant about these 18 hours is that you can find insights and wisdom that you can use, that they're relevant for today. You can use them in your practice. And I'm thinking, Ian, even some of what you've shared, you've certainly gained some insight and wisdom from Kingdom Advisors.
Absolutely. Absolutely. Even some of the questions I got from Kingdom Advisors conferences. So if I go to a Kingdom Advisors conference and all I get out of it is one sentence that I use on a regular basis, absolutely well worth the time, well worth the money. And I get way more benefits than just the one sentence.
So for anybody who registers for the conference, if you're not already registered, if you're registered by tomorrow evening, use the discount code CONF21 Canada. You'll get a 10% off the regular listed price. And I'll send you a free copy of Splitting Heirs. I trust I have enough copies here for those who are going to sign up. The other thing is, here, speaking of value, you do get $100 value, a US dollar value, when you sign up for the conference, this conference experience box, which you're actually going to use at the conference. This, to me, Ian, is a significant opportunity for us here in Canada. This conference, to be able to attend, we've got access to the content for up to a year. So even if I know it's busy during RRSP season for a lot of advisors, even if it is extra busy, you can still have access to the content for a full year after, so you don't have to watch the whole thing live.
So in case anybody needs to go, coaching people through how to communicate value is not part of my business, but I have mentored many people in that. And if any of you on the call want to contact me and just have me talk with you about communicating value, I'm volunteering for you to have the freedom to just connect with me in that way. And this, I hope you hear my heart. I'm not trying, this is not part of my business, and it's not an income for me to help people communicate value. I'm just volunteering to do that if that's something that would be helpful for you.
You've been a great source, I can tell you that, Ian, right now. And this topic has generated, obviously, a lot of interest. This is our highest registration that we've had since I've been doing these KA events. We are going to do one next month with Lauren Jackson, but I've got Ian's contact information on the screen, so feel free to reach out. His website is there, email and phone number. There is one question, Ian, that we'll wrap up with. Do you use a specific letter of engagement for signature upfront with your clients, or how do you go about that?
So I do. It's the proposal. The proposal has a cover page which says, "Thank you for the opportunity to present you with this proposal. This proposal, this is the value you're going to get from working together. The proposal is good until you have basically a week to make a decision. If you need more time to decide, that's fine, but I may need to change the period when I can serve you." And then the next page has the packages, what I'm going to do, and the value that they're going to receive from each package. There's a bit of fine print in terms of our relationship together.
Oh, Ian, I think you may have frozen. So that's good. Definitely appreciate that. By the way, here's what's coming up next month and the link to go ahead and get registered for that. I'm glad you took the opportunity to join us today, and I'm glad Ian didn't freeze up earlier next month. Thanks so much for being a part of this call today. Really appreciate. I know Ian is gone, but really appreciate it. God bless.